So you're thinking about moving to Fort Lauderdale and possibly buying a home? Well, in this video, I'm sharing 8 things you should absolutely not do if you're planning on buying a house, so stay tuned. What's up everyone, it's Tanner, and if you want to know everything about Fort Lauderdale, Florida, I'm doing tons and tons of videos about everything you need to know, so make sure you hit that subscribe button and tap the little bell so you get notified every time I do a new video. And I've been getting so many calls, emails, texts, Facebook messages, you name it, every single day from people moving and relocating here to South Florida, and I absolutely love it. So if you're even thinking about making a move here, you've got to reach out to me. I put all my contact information down below in the description. So when you go to buy a house, one of the people on our team is a lender, and what they'll do is a credit pull, which gives us a benchmark of where you're at, and they'll base a lot of it on your credit score. So the amount you qualify for, the interest rate, your down payment amount, all of that stuff, and typically that's going to be good for about 90 days. But on the day before or the day of closing, they're going to do one last pull to make sure nothing has changed. Now obviously we're hoping for it to get better, but realistically we can expect that it's going to stay the same. And if it isn't, in the worst case, the loan gets terminated, and that becomes a complete disaster because that means you won't be able to close on your new home. And that's a bad situation to find out the day of or the day before closing because you'll probably already have sold your previous home, scheduled the movers, and set up your utilities. So no one wants to be in that position. Make sure you stick around for all 8 of these tips to make sure that doesn't happen to you and your family. So number 1 is going to be don't apply for any new credit cards. And I know it's super tempting when you're at the checkout line in Target and they offer you that 10% off for opening a card, but don't do it. If you do, that changes your debt to income ratio and provides an opportunity for you to spend more money. And not to mention that credit pull before they approve you for the new card. So don't open any new cards before or after being approved through the lender, and that means all the way up until after you get the keys to your new home. So the second thing is kind of similar to the first because it also deals with credit cards, and that's don't close any credit card accounts that you currently have because your credit will have already been pulled and you're already approved for certain loan terms based on your available credit. And closing your credit card accounts will also have an effect on your debt to income ratio. And now it's okay to have them paid off, but actually closing the account will take away some of your available credit. So for example, if you have 2 cards, both with a $20,000 limit, you owe nothing on one card, but you owe $5,000 on the other, your total credit utilization is 12.5%. Now, if you close out the account for the card that you owe nothing on, but still owe $5,000 on the other card, now your total credit utilization is 25%. So I hope that makes sense, but my advice is just to leave it alone. Double check with the lender because they'll be able to tell you exactly what you should and shouldn't be doing throughout the entire process. The third thing you shouldn't do if you're planning on buying a home is miss any kind of payments or pay anything late. And I mean anything, not only credit cards, but things like utility bills, student loans, and car payments. Now, full disclosure, you can have some late payments and they won't hurt you as much, but if you even have one completely missed payments within 12, sometimes 24 months, most banks won't even give you a loan. So just make sure you're making those payments even if it's just the minimum amount. So number 4 is don't move any money around without a paper trail. So I know someone who was gifted some money from a family member, but it was given to them in cash. So they take it and deposit the large amount of cash into their bank account. Well, the problem is now the bank system thinks that you're laundering money or it's coming from an illegal source. So just make sure you have a clean, clear record of where the money is coming from. And that could have been as simple as just having the family member do a wire transfer rather than give them cash. Number 5 is an absolute no-no, so please do not go out and buy a car. This is the one thing that will destroy your chances of getting a home. I've heard multiple horror stories about people getting all excited, everything's going great, we're getting this new home, why not go get a new car too? And it just ends up ruining their day because now they have this nice new car, but no house. Number 6, do not buy new furniture. This is probably the most common one that people don't even think about, but furniture is usually a big ticket item, and most people end up opening an account with the furniture store because they have great deals. They offer no interest for like 24 or 48 months, but remember that is a line of credit, so don't do it. And even if you plan on paying cash for your new furniture, the bank giving you that home loan will most likely have questions and not be very happy about you dropping $10,000 or $15,000 in a day right before they loan you hundreds of thousands of dollars. So just wait until after you close on that new house to buy that expensive new furniture because you don't want to give the bank any reason to get weary about lending you the money. All right, number 7 is another one that will destroy your chances of closing on a house, and that's switching jobs. So let's say you're in the middle of buying your new home, you're pre-approved, You have the offer accepted on your dream home, and you have this moment of enlightenment and you realize you're not meant to work where you're at anymore. Well, guess what? Everything that you got approved for was based on your credit and your current income where you're at. And maybe the bank requires you to have 2 years of experience or pay history in your current industry to close on a house. And if you ruin that by switching jobs, your house just isn't going to close. Okay, the final tip, number 8, don't spend your savings. They see that savings account as a cushion for you to fall back on if something happens with work or really anything that could affect you making those mortgage payments every month. So if your amount of savings flexes down, then back up a bunch, they're going to take that as an indicator that you're living a volatile lifestyle. So just leave the savings alone, don't spend it, make sure you're budgeting appropriately, and if you're going to be making some big spends, make sure you keep the lender in the loop. That way they can document it and have it on file. But I'll be here to help you through the entire process, step by step. So if you're even thinking about moving or relocating down here to sunny South Florida, make sure you get a hold of me. All my contact info is down below, so give me a call, shoot me a text, email me, send me a message on Facebook, however you want to get a hold of me, because I got your back when moving to Fort Lauderdale.